Hi everyone, it's Eric Mashinsky, Gold Investment Letter, doing a quick weekend recording from my apartment in Chicago. Today is April 9th in the afternoon, 2016, and I wanted to do one of my quick video messages that really talks about a couple of things that have happened recently and what I think will be happening going forward. It's a very important time for investors and for the history of my newsletter, Gold Investment Letter. When I launched this service in 2011, it was really at the top of the bull market that started in 2001. Excuse me. And my attitude at that point was that we had not yet seen what will be the frenzy or blow off top phase of the secular bull cycle. We still haven't seen that yet. And I think it'll be even more powerful now because we've had a almost 5-year correction. It's normal for us to be very skeptical and cautiously optimistic with the latest activity that we've seen in gold, which has really started to perform well. Since the beginning of the year, 2016 has been quite robust in terms of the bullish activity, and we've also seen some incredible moves in our mining stocks. And I want to talk about what just happened late this week, which is that if you pull up the gold mining index, the miners junior index specifically, which I think reflects the overall sector in the gold miners very well. GDX does as well, but GDXJ is a little bit more pronounced. But I'm seeing this activity across the board with many of the miners that we follow. Some of the tiny exploration companies that we look for with substantial upside are much less liquid. They can march to the beat of their own drum. This index does have such a broad participation in everything from producers, mid-tier producers, smaller producers, exploration companies. There's over 100 that are held. It's a very good representation of the sector and really looks the same as, for example, like a McEwen Mining, MUX, which we cover and has doubled since our report in May of last year. It's been fantastic. And when you look at the lows that were hit in mid-January, January 19th, I'm looking at a chart as I talk, the move was considerable. We've seen the index take about 60% as of Friday, move upward, and that's a lot in a quarter, less than a quarter. And so the concern that I had as we saw this occurring into March and we were seeing some consolidation happen, my feeling is and was that this was the true test of what's going to happen if this was the real deal gold new bull market cycle, would tip its hand based upon how it reacted after this first big rally. If it was a bear market rally, and as powerful as it was, we would have seen the bull market consolidate and roll over. And because we had penetrated some long-term weekly charts, I've showed this chart pattern over the course of several different times. I'll pull it up while I'm talking to remember if it was the 50-week moving average, 200-week moving average. But we saw back last year and earlier last year that we had tested this level, and there was a lot of caution that I still had because we hadn't breached it on the upside. Some charts did, so you had that false blip, that bull trap that did happen. And now when we've broken through that decisively on virtually all of the charts that we follow with some of the most quality producers and junior miners, still had it in the back of the head that it might be a false breakout. So now, as of Friday, what we saw is a 5-week consolidation from the beginning of March until last week, 5 weeks, a nice triangular consolidation, even though we were up considerably. This is what a bullish chart and a new bull market looks like to the T. And Friday we broke out. We decisively broke out, above the previous highs, and we're going higher. The MACD is barely just crossing over. We're far from being overbought with RSI at 65. Amazingly, because the miners have been so destroyed, on the daily charts, we only were overbought slightly in February, and that wasn't even that bad with a low 70s reading. So the way that the market has been reacting, even though it's been very positive, it's been tempered a bit. And I think this is exactly what we want to see, where there's a lot of caution. There's a huge wall of worry that's got to be climbed in this new bull market. But I'm here to tell you today, if you're a Gold Investment Letter subscriber and you listen to my musings and think that I even halfway know what I'm talking about, my message to you today is don't be a flipper. First of all, it's extremely important, and I've been talking about this for months, even back to late last year, that it's time to ramp up the buys in the precious metals market for physical metals themselves, as well as the mining stocks, which have just been utterly demolished over the course of the last 5 years to a level that has not been seen. The HUI index was smashed to the point of was not seen since 2003, when gold was trading at $350 an ounce. The mining stock discrepancy to the price of gold is enormous, and it's just beginning to correct itself. The way to view this so that we won't become flippers is to look at when we pull up, and I'm going to do some work this week with some of my reports, of which you're going to see a slew of this week. I'm not messing around. We've got buy reports coming out on 5 new companies over the course of the next 2 weeks. I really want to get the word out on these deals while they're still cheap, because now's the time to be putting cash to work and doing so aggressively, because these prices that are still here now are not going to be seen again for a long, long time. But what you can do is you take GDXJ or any of your favorite junior mining stocks, and you look at that daily chart that goes back maybe 6 months or so, and you look and you think, I missed it. It's up too much already. I was hoping to get the cheap stock back at GDXJ. I was looking at under 20. I missed it. I was going to buy on a bigger pullback. The pullback didn't come. Well, guess what? Forget all that noise. We have got to adjust to markets. And the quicker that you adapt and adjust to what's going on in the markets, the more money you can make, or you're going to be frustrated. But the way to check out the perspective of how we haven't even come close to missing it yet is to pull up a monthly chart, pull up a decade-long chart of these indexes or these mining stocks, and you'll see that this move, even though it's been powerful this quarter, we are at the low end of the channel of where these stocks were back in 2010, 2011. It's of my opinion that not only will we retest the highs, and we're talking about some crazy stuff here, because if you look at GDXJ, for example, I'm just going to pop in the numbers while I'm talking. I think I'm not going to say exactly, but I'm going to pull up the monthly chart, and that might be commanding a 10 bagger to get back to those levels from the recent lows, which is a lot. But I look at the all-time lows at 17 that were hit in early 2016. Now we're going to pull up the monthly chart. Bear with me. It's coming up right now. Yeah, so we're talking not quite a 10 bagger, but $150 a share on GDXJ in 2011. So, and we are just starting to break out of that monthly channel. If you pull up this monthly chart and you look at that downslope that is being broken out, which I'm going to gladly check out even right now, because we may have broke it. Well, we're breaking it here in April. There's no question about that. So on the daily, the weekly, and the monthly charts, the gold mining stocks are officially in breakout mode, and this means that we are in for some good times for a long time. And that's why I want to talk a little bit about the psychology of how to maximize profits in a bull cycle, a long-term bull cycle, because the tendency, I think, for many of us is in our investing careers is if a stock moves up, 50% or 100%, 200%, we think we have to lock in those profits. And in some cases, that's true. And I think that if you want to be conservative in what is an aggressive, speculative, highly cyclical, highly volatile space, if you want to be conservative in the more aggressive stocks, the juniors, you can always sell half at a double, let your principal ride, sell a third at a triple, because these deals do double and triple. We're seeing that just in this first 3 months of the new action. But what's going to happen, in my opinion, is that there's going to be a ton of people that miss the lows, are in the wrong mindset now, still wondering and waiting for God knows what, when we've had the early signals rung and now really confirmed. I mean, I'm all in now that we're in a new bull market in gold. Literally, that movement on Friday was big for me, and really a confirmation that we're going higher short-term, intermediate term, and long-term. But then there's going to be people that did do something. I was talking to a couple of investors in the last month that had talked a little bit about buying some of our Bravada gold cheaper. The premium members started to buy this thing at 4 cents, 5 cents, something like that. And both of them said they sold it. One kept a little bit on the books, but it doubled and they sold the stock. And you guys can do whatever you want, but I think that's just completely foolish, because by the end of the cycle, at the end of the day, these companies and gold and silver are going to be so valuable that we're going to wish we didn't sell anything until a long way out. And because we had a 5-year bull or bear cycle, these things are at least 2-year cycles. When you get into a cyclical bull or bear market, you have to give these things time. If you're an investor, to maximize the value, and you're putting on positions in an early very early stage of a new bull cycle, you don't want to sell too early. It's the waiting and the sitting and being patient that's the tough part about investing, and when to sell. That seems to be the trickiest part. But my challenge to you is to do this one right. This market in gold and where we are right now is my coup d'etat. It's my first market where I'm a grown man. I've been through these before now, but I want to take some risk. And to be quite frank, at the end of this bull cycle, I want to be very, very rich, very wealthy. And I do fine and I do well and I make a good living, but I want to be very, very wealthy from this specific sector. It's not going to be from charging $38, $48 subscriptions for my readers. It's going to be from my personal investments that are in this sector. And I'm as loaded as I can get in a lot of these different plays. Even when I have disposable income now, any cash positions that open up in other stocks or sectors, business that comes in, I still am putting a large percentage of the cash that I have available into this sector. And I'm making some big bets, and I'm excited about it. And the key is going to be buying the right things, waiting, and then being prudent, but yet realizing that this is going to take some time to fully blossom. If gold is going to go to $2,000 or $3,000 an ounce or $2,500 an ounce in this stage of the game, the little companies that we follow, like the Bravadas and the Patriots and things, these stocks are going to go to dollars a share. It's not going to be whether they go from 5 cents to 15 cents or 25 cents. These deals with real assets are going to they're going to go up multiples of dozens of percents. We're going to see multi 50 baggers and 20 baggers and 100 baggers in some of these little plays that we deal with. Some of the mid-tier companies like the Sandstorms and the McEwen Minings and things, these are going to go up 20-fold. So I would just say two big things. One is we are in a new gold bull market right now. It's the early stage of this cycle. We're coming off of the biggest beating that the mining stocks have ever taken in history. Put money to work. If you have not and you have waited and you've sat back while this stuff has been moving up, don't wait. You don't do everything at once. That's why I think I have a balanced vantage point right now, because I continually chip away, and sometimes I ramp it up a bit and sometimes I'll scale that back. And there's going to be a point where I'm just not going to be doing a ton of new stuff. I'll be rolling over some profits and looking for deals that we can get in at a discount, because we're getting a private placement done for $1 million with a group of ours, and we isolate a company that will take the money at a discount and give us warrants, and maybe I'll sell out of a portion of a deal that just went up 5x and I've got too much of it. And those type of things will really maximize profits in a bull cycle as well, which I plan on being very active and busy in doing that. Yet, core positions should not be messed with. They should be held. And if you're going to sell any and you want to take some off the table, sell in little pieces so that you can have a certain amount that you're just going to sit on. Have your principal risk out, and then don't worry about the rest of it, and just let this thing ride itself out. Very excited about where we are today. I was also just doing some further diligence on BitGold, which I just wrote a report on last week, XAU.V on the Toronto Exchange, and BTGDF or DGF, I forget. I think it's BTGDF on the US exchange. Very exciting stock, very, very exciting way to save money in gold, payments in gold, redemption of physical gold, storing of gold. This thing could be a real revolutionary platform. And for me, I think it's a great way right now to save money in gold. They do have a MasterCard that's there for using for regular purchases. I've got mine, but I will not use it until gold is expensive. Right now, gold is cheap compared to my currency, the US dollar. We're going to talk a lot about the perception of what gold is and what it's done, depending on where you are in the world. The US dollar-based gold price is just starting to break out, but if you have been in other areas of the world, in Brazil, in Russia, in Colombia, in Canada, over the last year and a half, Japan, gold has been flying already. The US dollar is just catching up because we're finally going to see our currency come down along with all the other fiat currencies that have devalued themselves over the course of the last few years. I have my own opinions about why the US dollar has been strong, and I think it's a blessing for us that hold and earn money in US dollars, because we can use those strong US dollars right now to boost our hard assets positions, to buy other assets cheaply, and to diversify into other currencies if we choose. I just done some traveling at my home in Brazil and then through Colombia, both of which I believe have got very cheap currencies historically, at least to the price of the US dollar. And I ended up taking out too much cash and getting too much cash converted in each country and not spending it and bringing back, not a ton. It's $1,000, $1,500, $2,000 in each currency. But I tend to do that when I travel and I think the currency is cheap, and then I throw that in the safe or in the savings bank and let that sit. Because it's a global world, and we sometimes think of this stuff in a very narrow capacity, but gold is a store of value in whatever fiat currency you earn, your labor that produces profit and produces wages. If converted at that point into gold over a long period of time, should not change in value compared to the world. That's what gold is. That's what it does over millennia, and it still does it to this day. And there is a lot of challenges ahead for governments in terms of where we sit with federal deficits, debt, negative interest rate policies that are kicking in around the world. There is going to be some problems. I think at a minimum, when you look at how these currencies end up really becoming worthless over time, always, meaning 100% of the time, if you go to a fiat currency that's not backed by anything over the last 5 centuries, go dig up the history books. They're all worth zilch. But gold is worth what it's got the same purchasing power. So that's the story here. People don't understand gold, but they will, because we're coming into a time where if you don't have assets or currency backed in gold or silver, and I think BitGold is really what I look at BitGold as it is a currency backed by gold, because I can use the platform online just like my bank, just like PayPal, and I can make payments and I can take money out, I can take gold out, I can buy things, I can do whatever I want with that platform, but I have already sent in currency that converted into physical gold, and that's what's there. So it's backed by physical gold, and that may have some serious legs to it. So that's why I'm an investor in BitGold stock. I use the platform because I'm a gold bull and I'm a gold investor. And the last thing I'll say is that at the Gold Investment Letter, a lot of people call me a gold bug. I'm not a gold bug. I'm a gold bull. And there's going to come a time when I'm a gold bear, and that's fine too. But I'm in this to make money, and I really want to be aggressive now in spreading the message that I think has got a lot of value for people to take action based on the circumstances that we're faced with right now, so that people don't need to hear me get excited later when prices are super high and it's easy to get everybody else excited. That's going to be the tough part about this job, is now I'm the evangelist, because I think that if people understand what's happening, you'll follow along and you'll make a lot of money along with me. And it's contrary action when it comes to emotion and investing that is the biggest challenge for a newsletter writer or anybody in the investment industry when you're communicating a message to others. And I would just encourage you to be in a position when this thing starts to really kick into gear, that you're not chasing this market because you are here today. There's no reason for you to chase it tomorrow. Take some action today. Even if you don't shoot all your bullets, start shooting some. It's time to start taking some shots. With that, we will talk soon. Have a great weekend.